Good afternoon, everyone, and thank you very much for joining us today. My name is Patrick Nelson. I'm the Managing Director of Reach Markets, and thank you very much for joining the session. Reach Markets, by introduction, work very closely with private equity groups and venture capitalists, bringing investment opportunities to our network, generally of professional investors, and then every now and then we will look at an investment that we think is suitable for the market conditions. So late last year we were looking at using structured products that have been put together for the hedge fund industry to be able to go long volatility, and more recently we've been looking at the Optimiser type entry point investments because it is a tricky period of time in the markets at the moment, and we want to find ways of being able to go in, being able to patiently get our position. Now, any advice contained in today's presentation is general only. It doesn't take into consideration your personal circumstances, and you need to decide for yourself whether it's appropriate for you. Past returns are not an accurate indicator of future returns. So today, we're going to have a look at what is happening to our market. How do we optimize entry in a fear-driven market? How do we set up an investment up where we're able to cap and manage our downside? And why we think technology is well positioned for a rebound, and also as we go through the current market. Now, you know, we've seen that what the market did going through the COVID-19 as it escalated at the end of March, or sorry, at the start of March, end of February. And at that point in time, we saw an unprecedented fall in the market. Now, I'm a trader as well as an investor, and run a derivatives trading business, and we were right in the thick of it, and we were scratching our heads at the end of Feb, not really understanding why volatility was so low, even though we could see this corona thing starting to unravel in front of our eyes. And then all of a sudden, bingo, we fell, and geez, did we not fall quickly. I've got a chart showing the market from to a 38% on the Aussie market drop took 4 weeks. That same drop during the GFC took 47 weeks. And I don't know, I was actively trading throughout the GFC and investing and running a business. And geez, I felt the GFC, you know, it didn't sort of gradually happen to us. It was something that we felt from the very beginning. With this fall has really been unprecedented for any of us in the market, and it is, you know, we're seeing some sort of stabilisation now over the last little period of time, but now we're going to see, well, what's going to roll out when, you know, we're seeing, you know, Virgin and the contagion economically for different businesses and broadly and overall the market. It's really going to be coming at us from lots of different angles. So we're expecting volatility to be around. We're expecting there to be lots of news. Whilst all of this has happened, we've seen unprecedented stimulus coming in to try and protect us. And I don't know that it will protect the market from overall there being further downward moves. However, it probably is doing a good job for us. So how does this end? I mean, again, this is a black swan event. Coronavirus we didn't foresee this happening. There were many of us thinking that we would see some sort of volatility event and we would see something occur. The levers that were there for us aren't there. I mean, you can't drop interest rates really much further than where they are now, right? Some countries can't drop them at all. So we're expecting that whilst the market has consolidated, we've still got reporting seasons. We've still got to see as this unveils in front of us. There will be companies that will be impacted, and we do still see there being problems. And again, you know, we're seeing the conversation. How are we going to punish each other as a result of what's going on? Will America's trade war escalate against China? It was already there. Will this play a bigger hand in what's going on? So there are other things around, but we do believe this guy's going to be back one day. Technology stocks historically coming out of, we're focusing this investment over the next period of time, but we expect that that the coming out of the lows and GFC, dot-com bubble, Black Monday and so forth, there can be significant upside coming out of this. So a lot of us are sitting there going, look, I know that the market's sold off. I think there could be some further move down, but there's got to be an opportunity that comes out of this to buy in and to get in at low prices. So the question is, when do we buy and what do we buy, right? And we want to talk about an opportunity to solve both those issues today, all right? Now, this is a statement from one of the funds managers out of Goldman's, but big tech companies are likely to remain relatively unscathed, maybe even emerge stronger than ever and benefit from the work by home, play at home, and deliver to home sort of tailwinds, right? So, you know, we are changing in the way we go about things. We're doing, obviously, I'm keen to get out of, I'm working from home today, so if you hear the neighbours start the brush cutter or someone ring my doorbell, I'm pretty keen to get back to working full-time from the office. I've been still going to the office a bit. I'm keen to go back to normal life. Everyone's keen to go normal life. I'd like to go and see my friends at the pub. I'd like to go and be out taking my kids to school. I'd like to be going back to normal, but there's certain things have changed, right? And as a business owner, you know, there are certain ways that we will run our business that won't change. There will be more scenarios where we don't go interstate, where we won't do a roadshow overseas, where we just take advantage of the technology that we've now tested and proven to ourselves works and actually replaces the need to go out of our way, spend unnecessary money. The workforce doesn't need to travel. I think we'll go back and saying we're not going to need to travel the way we did. We're not going to need to go all physically into the CBD and pay expensive rents. We can spread ourselves out. We can work from home more. We can buy more things online and consume more things online. And I think these changes, they will benefit the technology sector, right? But a lot of these technology businesses were already well positioned. They were already been moving from to subscription models. Coming out of the GFC, software companies had 60% of their revenue is reoccurring. It's now already 80% reoccurring. So they're more immune to what's going on at the moment. There will be some businesses that will be affected, technology businesses will be affected, but people are really understanding the convenience of shopping online, consuming online, communicating online, and working remotely instead of traveling and the like. So we believe that technology as a sector, you know, that if we're looking as a sector that can be strong and can recover quickly, or even be strong throughout this period, that technology can be such a sector, and which is why we're structuring this particular investment. So one, we want to be able to invest in technology. We've chosen the US technology stocks. We believe they're some of the strongest in the world. We want exposure to these US, position ourselves for a rebound, have cap downside, but be able to patiently position ourselves into the market, right? So we want to be in a position where we get to choose our entry point, right? And I'll talk to the structure around that. Why the US? This is the US stock from 2008 to 2016. The strength of the US market significantly stronger than the Aussie market, and there's a range of reasons, and let's have a look at the sector breakdown. The information technology makes up 24% of the US market, and we're talking, their size does matter because the technology businesses aren't servicing a domestic market, they're servicing a worldwide market. They're not disrupting, you know, our local markets and industries are being disrupted by international players, by companies that come up with a solution that can be rolled out on an international scale. And so we want to go after the US market, we believe, because it's got the strongest businesses that are positioned the best to be able to go out and disrupt on a global scales. Coming out of a bear market, you know, the S&P has gained an average of 47% in the years following, and the year following, and we want to go through this and look at it from the perspective of not only how do we position ourselves as we go out, but how do we position ourselves in the best sector. We also want to make sure that we come into this with cap downside and be able to ensure our position when we go into it. So just in terms of the structure of the investment, for a net outlay of 14,900, you would get an exposure of 100,000. So you can take a smaller exposure amount, but this is just for the purpose of an example. So if I wanted, for the technology sector, I wanted to get US technology sector, I wanted an exposure of $100,000. The net outlay is 1490. It's a 2-year investment term. My maximum risk is 1490, and my uncapped upside is on $100,000. All right. So for that $100,000, how do we get to the 1490? It's $11,900 prepaid interest. There's an advisor fee of $3,000, and the total net cash outlay is 1490. All right. So what the structure of the investment takes the lowest month end over the next 6 months. So there's a look back function on this structure. We're using a derivative. And the way that it works is we take the lowest monthly closing level over the next 6 months. So this allows us to time the market over the next 6 months. If it falls, then it gets better. If it rises, great, we're already in, right? So if the market goes for a run from where we are right now, technology stocks take off and continue to go on a run up, great. We've already positioned ourselves into the trade. If, however, we go through reporting season, the general market is jittery, overall everything falls back, then we get to choose the lowest entry point off a month end over that period, right? So there's a volatility exposure rate. So if volatility is high, then it represents an exposure. The exposure level goes lower, and if the volatilities are lower, then exposure increases, which is in line with the fact that the market's generally going up on lower volatility and down on higher volatility, so that can work in our favour as well. But it gives us the ability to have this look back function, and where we might be sitting in the market going, I believe this is an opportunity to enter, right? But how do I pull the trigger of and actually get in and not wait and sit there on the sidelines nervously waiting and then potentially missing out? It gives me the opportunity to get in, position myself into a sector I believe which is going to be strong and has got potential significant growth upside. So I can position myself in, and if the market, we go through a reporting season, the market sells off significantly, that's fantastic. We get to enter in at a lower point. If it goes back lower over the next 6 months, we get there to position ourselves. Now, bull markets generally, bear markets have lasted longer periods of time, but as we've seen recently, the pullback has been so quick that we would be expecting that that over the next 6 months it will represent potentially some very good buying opportunities, right? But we get to time that position for ourselves. Now, in terms of the case study on performance, on the over here we can see the net outlay over 2 years, so that's the 1490. If I wanted to take $100,000 worth of exposure, if the market is to go flat, then my 14,900, that interest which is predominantly made up of that interest component, I would lose money. If the market was to go up 25%, then on my net cash outlay, I've made a 67% return. If it was to go up 50%, 230% return. If it's to go up 100%, 571% of my net cash outlay. All right. And so the idea behind this investment is we can move a smaller amount of money in the market. The worst case scenario is we risk that amount, but we get that leveraged upside. All right. So it allows me to take a position in the market. If the market falls further, then my entry point is just going to be lower. My buy-in level is going to be lower, which is great. And overall, if over in 2 years from now, the performance is up 25%, then I've made a really good return on my net cash outlay. If it goes up, as it has in previous markets, 50%, or 75%, whatever it might be, then there can be very significant returns on the upside, but allows me to take my position now and to time my entry. All right, you can take different levels of exposure, so just speak to the advisors about this, but 7,950 gives you $50,000 of exposure. certainly you can take significantly larger positions. It is completely up to you what level you would like to go in at. But again, it allows us to take a position into the market into a high fear environment. We have limited downside risk, but with an uncapped upside, and we're positioned for a post-bear rebound, specifically around technology. I'm just going to skip through these. So the quote here from Morgan Stanley, which is, you know, they see some of these tech companies as stronger post-downturn. Look, I guess there's a lot of talk about this. You know, we're not saying technology is immune. We're not saying that we won't face headwinds over the next period of time, and that we're not suggesting for one moment that technology stocks and the technology sector cannot fall further, right? But there is a lot of stimulus going into the market. There is a lot of tailwinds behind these companies. We've seen consumers shift online. We've seen businesses moving more and more of their operations online. We've seen businesses that have been cloud-based being a lot, you know, in strong positions with software businesses have been able to move their revenue into reoccurring, more and more into reoccurring. We know a lot of the big technology companies have had significant cash holdings, which puts them in positions where they've got deep pockets and they're positioned really well to continue to invest and move into what we've seen millions of people moving and businesses moving their reliance more and more online through this period. At the same time, other businesses are facing significant problems with consumers and businesses turning off and are going to need significant work to be done to be able to recover. They'll be relying heavily on government stimulus. They will have future problems that will be significant, and they may never recover, and the way that consumers engage with them will change. They may need to invest heavily in technology to be able to respond to the needs of their consumers going forward. And so we think that yes, it is an exciting time to be investing. There has been significant sell-off while businesses look cheap. Some of those businesses will be looking at significant write-downs. We think this is a sector that can go particularly well. We believe that there could be a great buying opportunity. That opportunity may be upon us now, but we want to be able to time our way in over the next 6 months and be able to choose the lowest point entry off a closing month over that period of time to be able to position ourselves into the market. Okay, there's a couple of questions that have come up. I might just quickly say some around this. This is an investment you can take through a self-managed super fund. It's a limited resource loan. That we mentioned that as a $100,000 position, you do not have to pay that back. It is limited recourse. So whilst you'll pay the interest on it up front, the $14,900 gives you $100,000 worth of exposure. That $14,900 is the maximum amount of money that is invested. That's the maximum capital at risk. There is no recourse on the loan. You do not have to pay anything back. All right. So no further obligations. All amounts are paid up front. And you've got cap downside. So whilst I've got $100,000 worth of exposure, the worst case scenario is that I could lose $14,900. Right. So it does put you in a position where you can take a position in the market. It can be a significant position in the market. What's my worst case scenario? Well, if I go and take $100,000 worth of stock or invest in the tech sector, whatever it might be, my risk is $100,000. Right. Anything can happen. In this case, which can stop people from being able to invest, right? So let me just so if you would like to get the product disclosure statement on this investment, just type yes into the chat box and we will get that sent through. What you need to do is type that yes in and we will get that sent through, right? Now, the question was, is the maximum investment amount $14,000? I'll just skip back up to here. You can go in to significant larger amounts of exposure. It's completely up to you. Here's just some examples, all right? All right, so yeah, there's just some examples of the exposure amount. If you would like to get a PDF sent out and have the guys fill in the paperwork for you, just type in the amount that you would like us to fill in the application. So if you would like $100,000 worth of exposure, type in 100,000 and we will set that up with $100,000 of exposure and send you through all the paperwork. The next step through from here would be to read the prospectus and then speak to one of the advisors, get any of the questions that you have answered. This investment closes at the end of the month, right? So it trades early in May, all right? Okay, Amanda's asked a question, do you think we need to invest more promptly to gain profits? Amanda, I'm not 100% sure on what you mean by that. So, but if you were suggesting that you need to get in today as opposed to getting in by the end of the month, I'm not sure about that. We think the US investment season will be an interesting period of time. So we're sort of comfortable investing in at the start of May as being an entry point, and then we've got the next 6 months to be able to choose the lowest entry point through that period, right? So that optimizer positioning gives us the ability so that it allows us to take a position now, right? And at any time over whatever the lowest closing value over the next period of time will give us the opportunity to take that entry point. Amanda's saying, in regards to the way US stocks have risen so quickly, look, I think that it's hard to know, Amanda. All right, so we entered into an optimizer investment on just generally on the US market at the start of this month, which has seen strong has seen that rise really quickly. However, we just don't think this is all played out just yet, and I think that will play out over a period of time. APT not mentioned, so Harley, I'm not sure what you meant by that, but do you mean appointments? If you want to talk to someone and have an appointment, just type in AP appointment and you can speak to someone. They'll organise to get you all the information. All right. We are working remotely. We've got an office in Melbourne and Sydney. But we're not taking appointments at the moment. Everything has to be done virtually, but you can do that over the phone or a Zoom meeting or whatever you wish. All right. So if you would like to get the PDS sent through, simply type in yes, and we'll send that across to you. If you have any questions, please type them in. If you would like to get the prospectus complete with the investment amount you would like, just type in the exposure amount that you would like. And the guys will send you out the PDS with that filled in, and you can just go through that in your own time, speak to the guys, and they can answer any questions you've got. Yeah, Harley, we'll organise that for you, that appointment for you. Again, just going through the numbers, 14,000 gives you 100,000 exposure, 2-year PUM, maximum risk is on that 14,900. And you've got uncapped upside to technology sector in the US over the next period of time. Look, as Warren Buffett, what's an investment presentation if you don't quote Warren Buffett? Look, we're not convinced that we've seen a bottom in the market. We think that over the next 6 months we'll see that play out. The governments are on the front foot stimulating, and we think the pricing, the exit is timed. Marcus asked a question, why to use and how is the exit timed? The 2-year period is just in response to how the market has fallen this time around, right? So Marcus, it has fallen a lot faster. If we were seeing a grind down, we probably would have been pricing this out over a 3-year period. But we can price it up over a 2-year period of over what we've seen. Exit can be sooner, so if there is a strong run up, we can close out of the investment faster if we want to take our risk off the table. We've certainly done that in the past on investment opportunities where we've seen a very quick move, right? So that's the basis of the timing on this investment. So at the point in time where we've seen the market pull off and where we've seen what's happening around COVID, we think it's going to be an interesting period through reporting season. There will be write-downs. The implications for businesses with an economy shut will mean that certain businesses will come out of this and will perform really well. We think the tech sector is one of those. and that's why we're going after it. All right, any other questions? If you haven't typed in yes already, please type in yes, and we will get the PDF docs across to you. For those people that have typed in the amount of exposure they want, we'll get those docs filled in and sent across as well. If you would like, please type that exposure level in and we'll get that set up for you. All right. But again, this is an opportunity. It allows us to get set up in the market. If the pullback continues, great. We'll be going in at lower levels. If it happens sooner rather than later, then we're happy to be on this ride. We're happy to be in the tech sector, and we believe that all that's occurred is better valuations for companies that we really wanted to own long term. All right. Beautiful. Okay, guys. If there are any other final questions, I will get those. I'm happy to answer. Otherwise, I will call the session to close in just one moment. And thank you to all those people that have asked questions, and for all the people that have requested PDSs and put in exposure amounts. We'll get that sent across to you today. But otherwise, in just one moment, I'll call the session to a halt. Okay, not seeing anything else come through. Thank you very much. Good luck, and we'll speak to you shortly. Thank you, guys.